Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We're going to talk about a couple of more growth and income stocks now for your consideration with our growth and income stock strategist here at Zacks, Todd BUNTON. The first one that you've written about, some say Greif, some say Greif.
Yep, I'll say Greif for this take. So.
All right, you do that. GEF is the ticker symbol. That's nonetheless.
Right.
This company does what?
They manufacture industrial packaging products, so any type of containers, stuff like that, that's what they do, some of the bigger stuff. Okay. It's a very well-established company. They've been around since 1877, but as you can imagine, they're a cyclical type of business, so they kind of ebb and flow with the overall economy. When the economy's down, less goods are being shipped, that's less revenue, less profit. But you know, as the economy's picked up lately, the company's definitely seen a benefit from that. They recently reported fourth quarter results. Revenues were up strong year over year, and that was on strong sales volume. Again, that speaks to an improved economy. And the company was also actually able to increase its selling prices. So they're definitely not immune to the rise that we've seen in commodity prices, but they've been relatively successful in passing that along to their customers. But it certainly squeezed margins a little bit. The gross margin actually contracted in the quarter, and you know that's due to higher steel prices, higher paper prices, higher plastic prices that we're seeing. But still, earnings per share were up 9% year over year. So the company is seeing strong growth. Analysts expect this growth to continue into 2011. Here we can see the Zacks consensus estimate for 2011 and 2012. Analysts are expecting solid double-digit growth, 13% in 2011, 12% in 2012. And management actually gave guidance for 2011 EPS between $4.75 and $5 a share. Consensus estimate falls well within that range at $4.92. But again, you're getting solid growth there as the economy picks up. The company should be doing just fine. And they also pay a dividend that yields 2.6%, so that's a nice little bonus. And they've actually been aggressively increasing that over the last 10 years. They've raised it 6 times at an average annual rate of 20%. So you're getting solid growth, solid income, and you're not paying a whole lot for it. They traded about 13 times forward earnings. It's a discount to the peer group of 14 times.
All right, Costco Wholesale Club, COST, ticker symbol. Pretty recognizable name here, being in the membership retail business,
That's right.
I guess you'd call it.
Yeah, they operate a lot of the big warehouses you pay a monthly membership to or an annual membership. They operate about 582 of those, mostly in the U.S. and Canada, but they've actually been increasing their presence overseas. And many might wonder if this business model, works outside of the borders of the U.S. and Canada, but it's proven itself. The company is a very solid, stable name, but as the economy's improved, they definitely benefited from that as well. They recently reported same-store sales for January. They were up 6% year over year. That's a very good number for a company of this size. It was better than analysts had expected, so this has moved estimates higher. As you can see, this chart here graphs the Zacks consensus estimate over the last 90 days, and you can see it's just incrementally been moving higher. That's something that we love to see. Analysts are expecting solid growth from the company, 13% in 2011, 15% in 2012, and the company is also very fundamentally sound. What I mean by that is they have a very strong balance sheet. They have over $5 billion in cash and short-term investments versus about $2 billion in long-term debt. So they've been able to fund their growth mostly internally. And they've also been using that strong cash to reward shareholders through stock buybacks, dividend increases. They actually started paying a dividend in 2004. They've raised it every year since. And they currently yield about 1.1%. When we take a look at the chart, you can see the stock has really taken off with the overall market since early September. That's led relative valuations a little bit higher. They're trading at about 22 times forward earnings. The Zacks consensus, the peer group average is at about 17 times. So it's a little above peers, but its PEG ratio, when you factor in the earnings growth, it's a reasonable 1.7.
All right, do you own either of these two?
I do not.
Check out more Zacks Rank Buy stock pick ideas on our website, zacks.com. If you're not there already, you'll see when you get there that we put 4 new ones up there for you daily, one on each of the investing categories that we write about. With Todd BUNTON, I'm Terry Ruffalo.